The most powerful institution in the United States is not the White House. It is not the Pentagon. It is not even the Supreme Court. It is a private building on Constitution Avenue in Washington, D.C. that controls the value of every dollar in your wallet, every stock in your retirement account, and every mortgage payment you will make for the rest of your life. This building is the Federal Reserve. And on January 9th, 2026, the President of the United States ordered his Department of Justice to open a criminal investigation into the Chairman of the Federal Reserve, Jerome Powell. It did not start with a press conference. It did not start with a declaration of war. It started with a notification on a smartphone. When the markets opened on Friday morning, traders in New York stared at their screens in disbelief. The dollar was collapsing. Treasury bonds were being dumped. And the rumors coming out of the Justice Department were so dangerous that CNBC could barely report them without triggering a panic. The president was not just angry at the Fed. He was trying to destroy it. To understand the magnitude of what is happening right now, you have to understand that this is not a policy disagreement. This is not about inflation or interest rates or unemployment numbers. This is about the most fundamental question in American capitalism. Who controls the money? For over a century, the answer has been simple. The Federal Reserve controls the money and the president does not. The Fed was designed in 1913 to be independent, to be insulated from political pressure, to make decisions based on economics, not elections. But that firewall, that sacred independence, is being shattered in real time. And if the president succeeds in bending the Fed to his will, the consequences will not just reshape America. They will trigger a financial earthquake that will crack the foundation of the global economy. This is not a story about monetary policy. This is a story about power. This is the story of how a sitting president decided that the one institution he could not control was the one institution he had to break. Welcome to the war for the dollar. To understand why this moment is so dangerous, we have to travel back to a different war, a war that took place nearly 200 years ago. The year was 1832. The United States was a young, chaotic nation still figuring out what kind of country it wanted to be. At the center of the economy was an institution called the Second Bank of the United States. It was not officially a government agency, but it had enormous power. It held the government's deposits, it issued currency, and it controlled the flow of credit across the country. It was, in essence, the Federal Reserve of its time. But there was a problem. The President of the United States, Andrew Jackson, hated the bank. He believed it was a tool of the elite, a corrupt institution that served the interests of wealthy bankers in New York and Philadelphia while strangling the farmers and workers of the frontier. Jackson was a populist, a man who trusted his gut over the advice of experts, and he vowed to destroy the bank. In 1832, Congress passed a bill to renew the bank's charter, giving it another 20 years of life. Jackson vetoed it. The bankers, confident that Congress would override the veto, were stunned when Jackson went directly to the people, campaigning on the promise to kill the monster bank. He won re-election in a landslide, and then he did something that no president before or since has dared to do. He ordered the Secretary of the Treasury to withdraw all of the government's deposits from the bank and move them to smaller state-chartered banks that his critics called pet banks. When the secretary refused, Jackson fired him. He fired the next one too. He kept firing cabinet members until he found one who would obey. The head of the bank, Nicholas Biddle, fought back. He deliberately triggered a financial crisis, calling in loans and restricting credit to prove that the economy could not function without the bank. Businesses failed. Unemployment spiked. The nation teetered on the edge of collapse. But Jackson did not blink. He believed the pain was temporary and that the death of the bank was worth it. In 1836, the charter expired, and the Second Bank of the United States ceased to exist. Jackson had won, but the victory came at a cost. Without a central bank to regulate the currency, the American economy spiraled into chaos. Wildcat banks printed their own money, much of it worthless. Speculation ran rampant. And in 1837, just 1 year after the bank died, the United States was plunged into one of the worst depressions in its history. The Panic of 1837 lasted for years, wiping out fortunes and destroying lives. Historians still debate whether Jackson was a hero who freed the country from tyranny or a fool who unleashed economic disaster. But one thing is certain. The war between the president and the central bank nearly destroyed the nation. And now, 190 years later, that war has begun again. The Federal Reserve was created in 1913 after a series of brutal financial panics convinced Congress that the country needed a lender of last resort. The design was intentional. The Fed would be a hybrid, part public, part private, governed by a board appointed by the president, but serving 14-year terms to ensure they could not be easily removed. The chairman serves a 4-year term, but by tradition, presidents have always reappointed the chair, even if they were chosen by the previous administration. This independence was sacred. The logic was simple. If the president controlled the money supply, He would always be tempted to print more dollars before an election to juice the economy and win votes, even if it caused inflation and long-term damage. The Fed, insulated from politics, could make the hard decisions, raising interest rates to cool the economy even if it was unpopular. For over 100 years, this system worked. Presidents complained, they pressured, they publicly criticized the Fed, but they never crossed the line. Until now, Donald Trump has never hidden his contempt for Jerome Powell. In 2018, Trump appointed Powell to be chairman of the Federal Reserve, believing he would be a loyal soldier who would keep interest rates low and keep the stock market soaring. But Powell had a different vision. He believed his job was not to serve the president, but to serve the economy. And when inflation began to creep up in 2018, Powell did what central bankers are supposed to do. He raised interest rates. Trump exploded. He called Powell an enemy. He said the Fed had gone crazy. He tweeted that Powell was worse than the president of China. For the first time in modern history, a sitting president was openly attacking the chairman of the Federal Reserve, not in private meetings, but on social media for the entire world to see. But Powell did not bend. He continued raising rates, and Trump continued fuming. Then came the pandemic. The economy collapsed, and Powell slashed rates to zero and printed trillions of dollars to keep the financial system alive. Trump loved it. He praised Powell as a hero. But when Trump lost the 2020 election, Powell remained in power because his term as chairman did not expire until 2022. President Biden reappointed him, believing that continuity at the Fed was more important than installing his own pick. Powell served through Biden's term, fighting the worst inflation in 40 years by raising interest rates aggressively, crushing the housing market and triggering fears of a recession. By the time Trump won re-election in November 2024 and took office again in January 2020, Powell was in the final year of his second term as chairman. His term was set to expire in May 2026. Trump made it clear that he would not reappoint Powell. He wanted someone loyal, someone who would cut rates, weaken the dollar, and make American exports cheaper to help win the trade war with China. But Powell was not waiting quietly. In late 2025, as Trump prepared to take office, Powell gave a series of speeches warning that the Fed would not be influenced by political pressure. He said that if the president tried to fire him, he would refuse to leave. He said the law was clear. The chairman of the Federal Reserve can only be removed for cause, meaning a serious violation of duty, not simply because the president disagreed with his policies. Trump saw this as insubordination. He saw it as a direct challenge to his authority. And so, in the first week of January 2026, Trump gave the order. The Department of Justice opened a criminal investigation into Jerome Powell. The official reason given to the press was vague. They claimed they were investigating potential conflicts of interest, possible insider trading related to Fed policy decisions, and whether Powell had violated his fiduciary duty to the American people. But everyone in Washington knew the truth. This was not a legitimate criminal investigation. This was a threat. This was the president sending a message to Powell and to every future Fed chair. Bend the knee, or we will destroy you. The legal basis for the investigation was shaky at best. The Fed operates under strict ethical rules, and Powell has always disclosed his financial holdings. There was no evidence of insider trading. There was no smoking gun, but the investigation itself was the weapon. The moment the Justice Department announced it, the markets panicked. If Powell was forced to resign or was indicted, the Fed would be thrown into chaos. The bond market, which relies on the Fed to act as a predictable backstop, began to crack. The yield on the 10-year Treasury bond spiked as foreign investors, particularly the Chinese and the Japanese, began to dump their holdings. They were terrified that the Fed was being politicized, that the dollar was no longer a safe store of value. The dollar itself began to slide. Currency traders, sensing weakness, started selling dollars and buying euros, yen, and gold. Within 48 hours, the dollar had fallen 3% against a basket of major currencies. That might not sound like much, but in the world of global finance, a 3% move in the dollar in 2 days is an earthquake. It signals a loss of confidence. It signals that the world no longer trusts the United States to manage its own currency. And the worst part is that this is exactly what Trump wants. He has said repeatedly that he believes the dollar is too strong, that it makes American goods too expensive, and that a weaker dollar would help American manufacturers compete with China. But what Trump does not understand or does not care about is that the strength of the dollar is not just about trade. It is about trust. The dollar is the reserve currency of the world. Oil is priced in dollars. International debts are paid in dollars. Central banks around the globe hold trillions of dollars in reserves because they believe the United States will always honor its debts and that the Fed will always act responsibly. If that trust is broken, if the world begins to believe that the Fed is just a tool of the White House, then the entire system collapses. Countries will stop holding dollars. They will demand payment in euros, in yuan, or in gold. The cost of borrowing for the U.S. government will skyrocket. Inflation will return with a vengeance. And the American standard of living, which has been built on the privilege of printing the world's reserve currency, will be shattered. This is not a game. This is not a negotiation tactic. This is the President of the United States playing with matches inside a gunpowder factory, and the fuse has already been lit. But while the traders on Wall Street panic, the real victims of this war are not the bankers. They are the ordinary Americans who have no idea that their entire financial future is hanging by a thread. If you have a 401k, a mortgage, or a savings account, you are about to feel the shockwave. When the dollar collapses, the price of everything you import goes up overnight. Your gas, your groceries, your iPhone, all of it gets more expensive because it costs more dollars to buy the same goods from abroad. If you owe money and the Fed is forced to raise interest rates to defend the dollar, your mortgage payment could double. If you are retired and living on a fixed income, the inflation that follows will eat your savings alive. This is not a theoretical risk. This is happening right now, in January 2026, and most Americans are not paying attention because the media is treating this like a political spat. Instead of the actually is, history is screaming at us. Andrew Jackson killed the central bank and triggered a depression that lasted and was supposed to be clear. You do not weaponize the money supply for political gain, but we are about to learn that lesson again the hard way. The question is not whether Trump will succeed in bending the Fed to his will. The question is what happens to the rest of us when he does, because the ghost of 1837 is watching, and it is smiling. If you want to understand the forces that shape your wallet, your job, and your future, make sure you subscribe to Empire Trap and hit the notification bell. We dig into the stories the mainstream media will not touch. And leave a comment below. Do you think the president should control the Fed, or is independence the only thing keeping us from total chaos? I read every comment. See you in the next episode.